Despite what he calls recessionary conditions in the housing market in this country, CIBC's deputy chief economist says that...
Is the housing market about to crash in 2024? Find out what you need to know to protect yourself and take advantage of the opportunities in this video. The rise in interest rates was one of the main factors that led to the housing market crash. In 2023 and 2024, the U.S. Federal Reserve, the Bank of Canada, the Reserve Bank of Australia, and the Bank of England raised their benchmark interest rates several times to curb inflation and cool down the overheated economy. As a result, mortgages became more expensive and less affordable for many borrowers. The increase in interest rates led to many homeowners defaulting on their payments, causing a surge in foreclosures and short sales. This increased the supply of homes on the market while reducing demand, causing the prices of homes to plummet and wiping out the equity of many homeowners. Various countries introduced new property tax rules that contributed to the housing market crash. In the U.S., the Tax Cuts and Jobs Act of 2017, which was extended by the Biden administration in 2023, had some modifications that affected homeowners and investors. The mortgage interest deduction limit was reduced from $1 million to $750,000, and the deduction for home equity loans was eliminated. Canada introduced a national tax on vacant homes that applies to foreign and domestic owners who leave their properties unoccupied or underused for more than 6 months of the year. The tax rate was set at 1% of the assessed value of the property. Australia implemented a land tax surcharge on foreign owners of residential property, set at 2% of the unimproved value of the land. Meanwhile, the UK increased the stamp duty land tax on second homes and buy-to-let properties by 3 percentage points across all bands, with the top rate for properties worth more than £1.5 million set at 18%. The housing market crash was partly caused by the collapse of the short-term rental market, which Airbnb dominated. The COVID-19 pandemic led to a drastic reduction in short-term rental demand, leading to a significant decrease in the average daily rate and occupancy rate. Airbnb's revenue fell dramatically, leading to layoffs and financing. Even after the pandemic, the short-term rental market remained oversupplied and underutilized, leading to new government regulations that made it harder and more expensive for hosts to operate. The market eventually collapsed in 2023 and 2024, leading to a significant reduction in Airbnb's listings and revenue, and the company went bankrupt. One of the most significant changes brought about by the pandemic was the widespread adoption of remote work, which benefited both employees and employers. This shift had a significant impact on the housing market, as many workers relocated to more affordable and scenic areas, reducing the need to live close to their workplaces. Another change that the pandemic brought was the increased demand for more space, both inside and outside the home. With people forced to stay at home for work, education, and entertainment purposes, many realized that their current living spaces were too small or unsuitable for their needs. This has led to an increase in sales and prices of larger and newer homes, particularly single-family and detached homes. In conclusion, the housing market crash of 2024 was a complex and multifaceted phenomenon that had far-reaching effects on various stakeholders and the overall economy. While it exposed the vulnerabilities and shortcomings of the existing housing system, it also created opportunities for innovation and reform. As we move forward, it is crucial to learn from the lessons of the past and work towards a more resilient, equitable, and sustainable housing market that can better withstand future challenges and serve the needs of all. Thanks for watching our video. Please give it a thumbs up and share it with your friends. Don't forget to subscribe to our channel and hit the bell icon for future videos. See you next time.